Hello, traders. I've got a stock that looks great right now, and I'll explain how I found it and why I like it. Subscribe to my channel now and turn on your notifications so that you don't miss any of these daily trades. You'll help me build my channel, and I'll help you build your account. Let's get started. We are 2.5 hours into trading. It is Thursday, February 25th. Hello, traders. We've got quite a weak market so far this morning. Let's take a look at some of our recent picks. We'll take a quick glimpse at the S&P. You can see all of the gains from yesterday have been given up. We are likely to test the low from yesterday. So let's take a look at how our picks are faring on such a bearish day. I don't have these in any particular order, but these are the picks that I've been highlighting. And we'll go right through the list. ABBV, beautiful support there, looking to sell a bullish put spread below that support. Stock looking excellent. AMAT, AMAT, leaning on this horizontal support right here, selling it out of the money bullish put spread. Stock is giving back some of the big gains that we had yesterday. However, still looking pretty decent and holding that support. APPS, not looking so good. This is one where I would suggest keeping a close eye on it. We were going to be selling it out of the money bullish put spread down here, keying off of that support at $70, selling to 70s, buying to 65s. This is one that I think you have to watch for. If we take out the open from February 23rd, you'll still be out of the money, but I think that you need to be very cautious. Perhaps exit that trade because we have a downward sloping trend line and that bullish flag that we were looking at has not formed. That alert line is not going to work there, so I will click on the high of this bar and then I will connect it to the high right there. Now I have a GTC downward sloping trend line. If the stock recoups itself, it will move higher. It is a tech stock. You can see here the market is continuing to push lower. Next stock, BIDU, looking to sell an out of the money bullish put spread, keying off of this 265 support level. Still in decent shape, still another support level right here holding in. If you are short this bullish put spread, you need to consider buying it back if this support is breached, and it's a very big and if the S&P 500 closes below the upward sloping trend line slash the 50-day moving average. We will take a look at that. We want to make sure when we're closing out these out of the money bullish put spreads that the stock is still holding its support levels and that the market is still holding its support levels. As long as both are intact, the support on the stock and the support on the market, we're okay with the bullish put spreads because we'll let the market move around. Time decay will constantly be working in our favor. But if the market breaks down and the stock starts to show some relative weakness and breaks that technical support that we're leaning on, you got to start buying back your bullish put spreads and reducing your risk. And Disney was one that I highlighted, I believe, 2 days ago. Again, another bullish put spread keying off of this support right here. That was resistance, gap through it, tests it, rally off of it, bullish flag. That's another nice out of the money bullish put spread. That is the best strategy to be using right now, and I'll explain why in a couple of minutes. HLT is a stock that I highlighted last week. That actually looks excellent. It is in the travel industry. We've seen a really nice bounce in hotel stocks. So let's take a look at HLT. Beautiful horizontal breakout right there. We were selling the 115, 110 bullish put spread in March, and we were doing that for a $1 credit, as I recall. That spread is still in decent shape. You can see the stocks at 121. I believe, if anything, it'll come back and it'll test that breakout. Coronavirus cases are dropping off. The economies are starting to reopen. That's really what the market is focused on. ZNGA, the final one. You can see that beautiful breakout, support, support. That's what we were leaning on, but the stock is starting to flirt with that $11 support level. Again, everything keys off of the market. I like these stocks. I still think they work well. We just need the market to find some support in here. So let's take a look at the market and see what it's doing. Earlier today, we had this nice pullback, and then we had a very, very brief little rally here, and we had a 1OP bullish cross. I had mentioned to members, I said, These are some long red candles here. I would not trust this little bounce here. This is not something that you want to buy, especially with this inverted hammer right here. That was a sign that, yes, we're going to be off to the races. Not so fast. So sellers come in and they squash that little attempt at a bounce. Then that's followed up with a long red candle in very short order. We've got this long red candle here. So we needed to be very cautious on the open. We were. We get this nice steep drop and then a decent looking bounce in here. I actually bought this bounce because we had gotten above that open right there. I ended up taking a 50-cent loss on an S&P position, and as soon as I saw the market start to roll over, I was suspecting that this was going to be another bearish flag and that it was going to fail. And more importantly, we had been seeing a rise in the 10P indicator during a market decline. That's what we call a bearish divergence, and that means that we are due for more selling. I missed the short here initially, then I started offering the futures. I never got filled, and then the market dropped out, made a new low for the day. I didn't chase it, so now I'm on the sidelines. I didn't get that trade off. I wish I had. How does this play into the larger picture? We are in this fairly tight upward sloping compression. My apologies, I just got knocked off of my SPY chart. We are in this fairly tight, longer term, upward sloping channel that I've been referencing. And because it's a fairly gradually sloping channel, it can stay intact for a fairly long period of time. But look what's happened recently. Here's the beginning stages of it. Nice and tight, up and down. Beautiful. Recently, however, big drop, big reversal, big drop again. So I believe that we're going to see a lot of volatility within this tight upward sloping trading channel. So the best way to play this is to be a seller of bullish put spreads. Wait for these dips. This is where you want to find your stocks with relative strength. Sell out of the money bullish put spreads. Market rallies. Those options will start to decay. You'll have an opportunity. You could buy them back, but you might as well just leave them on because time decay will be working in your favor. There you've got a couple of weeks elapsed. Those spreads should be expiring. Then you get another test of that upward sloping trend line. This is where you would want to sell some more out of the money bullish put spreads. We'll put up the 50-day moving average and you'll see that it comes into play pretty much where that upward sloping channel is. So the bottom of this channel is kind of mirroring that 50-day moving average, and you can see that that distance has been preserved. So I believe that we're going to see a little bit more selling today. We're going to test the low from Wednesday, and we're almost right on it. There's my alert line right there. Haven't seen anything right now that tells me that we're going to rally. You need to be very patient today. This is not a move that you want to buy. This is a very steep sell-off. I believe that we are headed for a bearish trend day. So here's what's likely to unfold. We kind of bounce around here for a little bit. We get another little bounce higher, and that should coincide with a bearish 10P cross. And then we test this support line right here from yesterday's low. If we take that support out, we could continue to drift lower and sell programs will start to kick in. So we have to be very careful of that. Well, what's going on? What's causing all this selling? What is the problem here? I thought we were going to have that big stimulus bill and everybody was going to be all happy. Well, right now, the thinking is that it is going to impact interest rates. And you can see I've referenced the TLT often. Yesterday, I thought we had a capitulation low here. We gapped down, put in a nice long green candle closing on its high. Expected to see another long green candle today. What happened on the open? Uh-oh. We opened actually below the open from the prior day. I'm going to turn off my alerts here so that we don't get any more of these, although they have been excellent. So let's go back to that TLT chart. And you can see how the TLT has been super, super weak. As bonds sell off, yields rise. So interest rate concerns are starting to creep into the market, even though the Fed has reassured us we are not tightening anytime soon. Well, the market doesn't believe it. it feels that inflation is going to start creeping in with all of this stimulus and with a weaker dollar. When the dollar is super weak, that means that we have to pay more for our imports. So that is inflationary. We're seeing energy prices rise. Oil wells have been capped off. It takes a long time for those wells to be put back into service. We had a glut of supply in 2020, and now it's taking quite a while for all of that to recycle and for them to get oil to market. So you're seeing oil prices rise. We're noticing that at the gas pump. Higher oil prices tend to flow through the entire economy. So that's currently what's bothering the market. There's also a notion that $1.9 trillion is a whole lot of stimulus and that it's not going to be spent efficiently to spur an economic recovery and that it's just going to increase our national debt. 1.9 trillion, yeah, you can bet that there's going to be a lot of money in there for special interests. So in any event, the House is going to vote on the stimulus bill, and it looks like it's gaining traction, meaning it looks like it's going to get passed. But all that glitters is not gold. I thought that stimulus bill would fuel us to a new high, and that simply is not happening. That's not the case. And you can see now we're super close to the stimulus bill, and we're not getting that liftoff and that breakout through the all-time high. So once the stimulus bill is approved, we're all going to learn what's in it. We're going to see which areas of the economy are going to benefit. We know that airlines are going to benefit. I like Boeing. I've been pointing it out. The airlines have done really well. If there's any inflationary pressure, we're going to see that reflected in stocks like PXD. If you're looking for an energy stock, I love this stock. It's been coming up on our searches. I'm going to go into the scanner and we should see PXD and in the heavy volume list. I don't see it off the bat, but I know it's been in there. It's also been strong relative to the market. Let's take a look, see what the stock is doing. See how the stock is actually above the prior day's high on a day when the market is getting trounced? That is what we call relative strength. PXD is definitely a stock that I like. I think it's one that you can play. I also have another one that I like. This is a longer term play. I love Mosaic. This is a stock that you can park some money in. Fertilizer is in high demand. We're seeing grain prices rise. They had very poor weather in South America, which is a huge grain producer. Crop prices are on the rise. That means that farmers are getting more money for their crops that they're selling, and they are looking to increase their yield. So they are buying fertilizer to do that. Mosaic is a huge potash producer. Potash supplies globally are controlled by a very small handful of companies, and they are definitely going to benefit from this. So MOS is my pick of the day. Let's take a look at that daily chart. Absolutely love that breakout through horizontal resistance. This stock does not have very high option implied volatilities, so you can simply buy some longer term in the money calls, maybe go out to the June expiration, buy the $30 calls, and the stock doesn't make massive moves. It just tends to grind and then flatten out. In fact, I think I highlighted MOS yesterday and I described why I like it. So you may want to watch yesterday's video. MOS is going to be my pick of the day, though. I really like it. Sell out of the money bullish put spreads. I mean, with the exception of MOS, I think this one is a nice longer term play and it's going to give you some nice consistent movement towards the upside versus some of the other plays. I'm looking for a little bit higher option implied volatility, a little bit more movement. I'm trying to distance myself from the action and I'm trying to take advantage of accelerated time premium decay. As far as your overall short term swing trades, this is the magic line. You can use the 50-day moving average because that will tell you exactly where that support is that needs to hold. And it's coming into play around 379.50. We rallied off of it just before we got to that 50-day moving average. So that tells me that buyers are still looking to get long at this level. You can see that bullish hammer right there. So a little bit more weakness today. You don't need to rush in and buy right away. I think that this is going to be a bottoming process. This is a pretty swift move lower. in the chat room, we'll be looking for this bearish 10p cross. We'll be looking for 10p to come down. And then when we get our bullish cross, we'll also be looking for a breakout through this downward sloping trend line. I believe that, well, right now we're 2.5, almost 3 hours into trading. I don't believe we're going to see a meaningful rally until at least another 2 hours. So the last 2 hours of the trading day are when I'm looking for a possible bounce for the market. Volatile within an upward sloping trading channel. So not a high probability trading environment, but still upward sloping. So I would suggest really focusing on those out of the money bullish put spreads. When we get these dips, that's where you want to be entering your trades. Wait for the next dip, enter the trades. So timing is a little bit more important than it has been in the last year. Thanks for watching. Good luck. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.